Hey, good evening, everyone. I say good evening because we're doing this recap at night. We usually do it during the day, but welcome back to one of Travis and our weekly recap. Hope you guys watched the last one. I don't have a ton to cover, but I'm going to let Travis kind of start off. So hopefully these recaps give you guys value in what you're doing with your trading strategies. And please, by all means, leave comments below. If you're not subscribed to Travis's YouTube page, the OPF YouTube page, please subscribe to it because that'll ensure you'll get these weekly recaps. That you'll get a reminder. Hey, we put out a new one. So with that, I'm going to give it to Travis. He's going to cover things.
Yeah, well, thanks. Yeah, and just you saying that made me realize I was like, oh, I didn't post it in our private Facebook group. So I was like, no one's ever given any feedback if they appreciate us posting them versus YouTube. So moving forward, I may just post it in YouTube and in the members area. So that way I know everybody will get it because they have access to the members area if they're a current member. All right. So what I'm going to do, I'm just looking over here at my notes real quick. Of course, Peter and I don't really have any trades, but even if we did, we just sharing this for education, informational purposes, not saying this is what you should do with your money. But what I want to do is cover the general market. I was looking at the stock markets. First time I've looked at it today. I didn't even log in and look at my trades today. I don't have any trades. So it's kind of like this year I want to move to set it and forget it strategies again, or move back to that. That's my bread and butter, what I prefer. Trade once a month, and then I spend the rest of the month managing those positions. And that's why I can be that 10-minute trader, because it doesn't take me that long. I log in, see if anything's broken. Like my kids, they were like, why do you need to log in to look at your investments today? I was like, I just need to see if anything's broken. That's it. Check, everything's working fine. I log off. I'm done. I'm back playing with them. But the market has gone up. If we look at the bottom here, what Investors Business Daily is one of the newspapers we use. They had a confirmed bottom here I can't remember when. I pointed it out in another video, but I'll put an annotation here when they had the confirmed uptrend. And I think it's January 4th here or 3rd. But the market from the bottom, the most temporary bottom, which will be now its support. Support is a price area. Stocks have had trouble proceeding past. It's gone up about 13.7%. And that's in like 2.5 weeks. That is huge, especially when stocks average 9% a year, right? It's gone up more than its average in a couple of weeks. So what that tells you is this behavior is unsustainable, right? It can't continue. I can't see it as anything's possible, but it's highly unlikely. So it's said another way, it's highly unlikely the stock market will continue 13.6 in another couple of weeks. So resist any temptation now to jump in. Like a lot of people who missed that, they're seeing the market take off. They're kicking themselves because they were ticked off that they lost money, right, the last few months, and they were waiting for a great time to jump in. And I can tell you what happens emotionally. The time you jump in is usually the worst. So you see the market has gone up so far and so fast the last few weeks. You're ticked off. You're upset. You feel like you're missing out. You want to jump in now. Probably the market's going to fall now. I don't know. No one can predict the market. But I do know the likelihood of it going up another 13% in a couple of weeks is pretty low. So either it's going to peter out or it may fall back and test this level of support. Those are the things I'm more likely looking for. But ultimately, somebody emailed me and were like, well, if you knew what the market was going to do, you could succeed. And I was like, well, no, I respectfully disagree. That's the point. You have to set yourself up to win no matter what the market does. And that's the key there. And devise a strategy to where you really don't care what the market does. You don't care which way it goes. You don't need to know which way it goes. You're still going to make money. That is the key. And so that's one of the reasons I try my best to always be in the market some way, somehow, to benefit no matter which way it goes. It doesn't mean I'm fully leveraged and have my entire portfolio out. I still use my templates, like Market Club template is on sidelines mode right now. We pull that up. Peter was just talking about it. He's waiting for our next template signal to be satisfied to say, hey, we can go in. So for those trades, yeah, I'm in cash. I'm sitting on the sidelines. I'm not waiting. But there are other strategies where I still can be in the market, without the template and still making money. And so without getting into all that, that's just a philosophy behind it. You want to be in a position to make money no matter what the market does. Now, I will end with this, just a quick explanation here. excuse me, before I turn it over to Peter, someone had asked me in the Market Club Options members area to explain what I talked about in the last recap. I said we were using like 5 or 6 strategies this year: the Buffett strategy, the Profit Accelerator, a rental income, cash flow, 10x strategy, portfolio insurance. And they were like, can you explain those? Because they pretty much sound like the same thing. And I was like, they kind of are, and then they're not. So where Peter and I was talking off camera, was like, well, we were using a simple tool as a cash secure put, right? It's just a strategy, but the intent behind how you're going to use that will differ. Same strategy, but it's being used in a different way. So one example is a lot of people trade cash secure puts for income, right? That is one intent, one use of that strategy. Another person may use it like me. The Buffett strategy, we're modeling Buffett's approach. He's not really using the cash secure put for income. He's using it to get paid to buy stocks he wants to own. While he waits to buy those stocks, he invests that income. So it's kind of like an insurance company. You're leveraging your cash flow. So we already want to buy the stocks. We're just using it as a way to get paid to buy the stocks we want to own at the prices we don't own them. And we got this extra free cash flow, so we're going to invest it. So it's same strategy, the cash secure put, but the intent behind the strategy is a little bit different. And so that will dictate how we use it. And so the name of these strategies allow me to communicate how we're using them. Instead of just saying cash secure puts, spreads, and all that, it's like, well, average people on the street, they don't know what that is. I just went to an investing conference last year, and the guy was at the table so excited talking about covered calls and puts, and there were financial planners at the table looking completely confused, right? They were like, one of them leaned over, made a joke about it, like calls, puts, way over my head. And I was like, exactly. I was like, that's why I'm tired of using that language. When I say I'm renting out my stock shares, people kind of understand that. They're like, well, I didn't know you could do that. But they understand, renting stuff for cash flow or income. When I say cash flow, they know I'm using this for cash flow. Profit Accelerator is just that. I'm using this strategy to accelerate my profits. The 10x strategy, I was explaining to my mentor, my beginning, how I use calls to grow my account from like 10 to 70 grand in a couple of months. Oh, I forgot, Peter, I don't know if you were with us when I took 2 grand and turned it at 55 grand in a couple of months. It was trading LinkedIn. I was trying to solve the millionaire blueprint mystery. This guy showed me how he made $1 million in a year, and he showed me exactly how he did it, but he didn't give me the strategy behind it. He just showed me the numbers. I'm like, been trying to figure that, crack that code for years. And so I was pretty close. But anyway, when I was explaining all this stuff to him, he was like, that doesn't sound like, and he was like, that's not a call option. That's a 10x strategy. And I was like, oh yeah, great. So I was like, I can show that. We're literally trying to 10x our money. If we invest 200, we're trying to 10x that. And then portfolio insurance is just that, is protection. We're using that as a form of protection. So that's the difference. And again, all right, portfolio insurance. What is it using? It's using a put option, right? But think about that. Same tool, a put option is one intent is used for insurance. The other intent is used for a cash secured put. It's the exact same tool we're using, but the intent. So I just talked about 3 different strategies, but it's only one tool, a put option. It's used for insurance, it's used for income, and it's also used to get paid to buy stocks. The same strategy. So that's how one thing can be used for 3 different purposes. And the purpose you use it for will vary. No, your trade plan will vary based on how you're using it. I hope all that made sense. I'm just kind of sharing this off the fly, off the top of my head. If I'm confusing, Peter, you can clear it up. But let me turn the floor over to you.
No, it made sense, and that's kind of what we were talking about. Some people do use cash secured puts for income strategies. We use cash secured puts for, I use a cash secured put to buy a stock at a discount. So if someone's using it for an income strategy, they're usually selling like a 30 or maybe a 40-day cash secured put. Whereas I sold a 400-day cash secured put, totally different. Same exact execution of a trade, totally different strategy.
That's true.
I could call that income, but most people would be like, you can't live off $1,300 in 2 years. Which is why it's not an income strategy. So
yep, that's a good point.
Anyway, I think you pretty much summed it up. That's kind of, we talk about in the basic options trading lessons that there's every one of these options strategies that we talk about is based off of one of two things: a call or a put.
That's true.
So you have to take everything. You can't just take someone's one-time phrase and say, well, that's not an income strategy. It depends, so anyway, the only thing I was going to cover real quick was what I'm doing, because Travis talked about it. Nothing's really changed from last week. I haven't gotten into any new trades. And so what I do at this point, you can see my screen, right, Travis? So
yep,
I'm showing Market Club. So basically what I do when I'm in my Market Club, I'm looking, number one, so I'm kind of changing things up the way that I used to do it because of the market volatility. And what it did this past year. I figured I'd put my trades, my vertical credit spreads. I would use what we call a directional template, which improves my chances of success. And that's basically what it does. So with if you guys watch us, credit spreads, you don't necessarily have to be in the exact right direction to profit from a credit spread. But you can lose on a credit spread if you're totally wrong and it goes against you, right? So, which happens. I mean, it does happen. So what I'm doing is I have, when I look at my Market Club, I'm just basically looking at where the market is. So I'm looking at, let me pull up, I have indexes here. So these are the three major indexes that we look at: the NASDAQ, the Dow, and the S&P. You can see they're all plus 70s, which is great. But right now, what's holding me out of the market doing credit spreads, bull put credit spreads, are these three red triangles. And I'm certainly not doing bear call spreads because of these three green triangles. They're not in unison. I'm waiting for that. According to the IBD, the market is in a confirmed uptrend. So great. Now I'll just wait for these monthlies to turn green. When I see a plus 85 or better score here, I can then go over to my portfolio. I call it my internet portfolio. Is no longer full of the internet portfolio stocks. It's got a bunch of them. But you can see I already have a couple stocks. McDonald's and Starbucks are already ready and waiting to go with this template. I'm not executing it. I could sell credit spreads on these stocks. I could do bull put credit spreads because they technically are, based on Market Club, they're probably going to go up. There's a good chance they're going to go up. But with the volatility we've had, I'll wait till it all goes green. And when they start going green with the market, then I'll start doing credit spreads. That's it. That's pretty much what I'm doing. So a lot of it will look like I'm not making, I guess the argument could be I'm not going to make a whole lot of money and over the next few months, or I'm going to miss out on, what the market's doing. I don't look at it that way because when the market gets in unison and I see my signals and I start trading credit spreads based on our Market Club template, which is highly successful with calls and puts, I can only imagine the success I'll have with my credit spreads at the money credit spreads, no longer out of the money credit spreads. And I'll gain all that cash that I didn't make necessarily in January. So
there you go.
Patience is the key though.
Yeah. Patience equals profit.
Mm-hmm. So, all right. I lost. Let me see. Okay. I'm giving you back the presenter view. Not that it goes. Doesn't matter, but.
Nope. No more presenter.
Excuse me.
All right. Well, I think that was it. Short and sweet. Keep it short until we start making trades. We'll have more to go over. So, any final takeaway message you have for them?
I don't. For our option profit members, and I know you have the Success Academy open right now too.
Yeah, I didn't even mention that. It is about to close.
So I know Travis, and you could probably put a link to it in this video if it's still good to go. But basically, you could go to learnstockoptionstrading.com. You can go there and find the link. But the Success Academy is open. We only open it for a short period of time because we take in a very small amount of students because that's what we can coach. Because I think I've taken other courses and I'm proud to be a co-trainer of this program because we don't take on more than we can chew. We actually coach you guys. We're there for you guys 24/7, 5 days a week. I like to say 5 because we do take our weekends off, but we're always there for our members. So the Success Academy is open right now. If you're ever, trying to fix whatever financial issues you may have with regards to investing, I think you should seriously take a look at increasing your financial education. And I haven't found a better program that does it. So, I've done a few.
Well, we appreciate that. Is the bias owner, the bias creator of that program? I appreciate those compliments. And I'm glad you said that. I was like, oh my gosh, I totally forgot. Yes, enrollment is open. It's going to close here probably the day I post this. And it may be the only time open this year. Maybe open one more time. Because I had a change of heart. I realized you and a couple other members are the most successful members. And I noticed, I'm like, it took me a while to notice this pattern. Like, all of you all started with the basic course first, either when we had a Udemy course or the option basics. They're like, well, I took your other course first, and then I enrolled in Success Academy. I'm like, it's sort of like karate. You graduate them, white belt, yellow belt. You gradually moved up versus like, let's just throw you in here at black belt immediately. I'm like, people are drowning. I'm like, the most successful students are the ones who graduated up through the levels. So I may just completely not open it to the public anymore. And they have to go through some kind of basic course first. And then, when they're ready, then they can take on the Success Academy. So I'm strongly considering doing that. Most likely I will, because I don't do things just for, let's just open a program and accept a bunch of people for money. It's like, no, let's do what's in the best interest of the people who enrolled in this program. And if you found a way to, a way to increase their chances of success, then you do that. Sort of like how we stagger their learning. Okay, you learn this first 5 days, this section opens up. Some people join, they're all ticked off, like, I want to go through everything right away. And I'm like, well, learning and consumption or retaining and consumption are two different things. We're trying to set you up for success. And so you have to take baby steps. And so, we take the heat, we take the frustration. We're like, we're sorry you're upset, but this is for you so you can learn it better. And that's what matters to us is your success, not that you just consume a bunch of material and not use it. So hope that made sense.
And we found that people they consume a bunch of material, but they're never, 12 months from now, they're right in the same position they were, and they can't figure it out. And they usually blame it on the course because, of course, the bottom line is it's not the course because there's many, many successful students. So you can't blame it on a course that has many successes. You could blame it on the course if we had one success out of hundreds, but that's not the case. So, and that is what we found. No, and that is what we found. Travis does a ton of metrics when he does. Each time he's always retinkering with this thing because he's taking metrics and he's figuring out what works. And I never thought about that, but you're right. I didn't come into the Success Academy first. I actually learned on his free website, which is still out there.
Yeah,
it's still out there.
Yeah, people don't go through it.
Unfortunately, it just kind of drives home that same point we talked about, that if people were successful from free stuff, then there'd be a lot of successful people. But the reality is there is a lot of free stuff out there that will help you do something better. Most people don't put a lot of heart into it because it was free.
True.
Totally. So anyway, that's enough. I'm done.
Yeah, that was a good point to end on. So, because I could go off and on in that rant, but I won't. You're right. All of our success stories come from people who've actually had something invested in themselves, and that's when they paid for the education. So that's the summary there. But hey, you all take care. We love doing these for you each week. You take care. Any feedback, just let us know. All right. See you next week.
See
Bye.
Ya.